Good evening, everyone. Welcome back to the Drummond channel. It's November 7th, about 4 o'clock in Hawaii. And I was poking around in some charts and I came across some stuff that I thought I should share. And if you were on the Zoom call last night, on the Drummond, the DG Inner Circle Zoom call we had, we talked a little bit about what's going on in the higher time periods for the S&P E-mini. And I want to elaborate on that a little bit for the YouTube channel. In the comment section, I'll post a link to the DG Inner Circle where you can see the video from last night's call. Now, let me dig into this starting with a yearly chart on the left, and you're seeing a white line there in the middle going from the bottom 2 years ago to the top of last year's bar and projected over to this year's bar. And this is called a 5-9 down. 5-9 down is a very useful tool in flagging exhaust areas, exhaust moves. That red bar up above the price bar, that's called the farther out resistance area. So we've got the yearly entering into farther out resistance at a yearly 5-9 down, and that price level is 6,100 plus or minus a few. On the right is the quarterly chart, and from 2 quarters ago, the top of that bar across the last quarter's top of that bar projected onto this bar, that's called a 5-2 down. And the 5-2 down price level is around 6,000, plus or minus a couple. And it's also prices located in those white bars, and those are called the nearby resistance areas. So we've got yearly and quarterly in resistance areas. And let's move over onto the monthly chart. And with the monthly, you can see from the bottom 2 months ago to the bottom last month projected onto this month's bar, that white line is called a 5-1 down. And that's a high probability stopping point. So we have a 5-9 high probability, we have a 5-1 high probability on yearly and monthly basis, and a quarterly resistance area. And now move over into the middle chart. And I should say that resistance area on the monthly chart is again in the 6,000, right around 6,000. And then we move into the weekly chart in the middle, and the weekly has just hit a 5-9 down today. And that's, again, another resistance area. It's in zone 6, that blue area up there. That's the top of zone 6, so it's in an area where we would expect the energy to run out of steam. The energy of the crowd will lose momentum way up there in zone 6, way up there at a 5-9. And then lastly, we're going to take a look at that daily chart on the right, and what we have is a 5-1, 5-2 down combination. And this is a high probability stopping point for a market. If you see that on the bottom end or you see that on the top end, you can usually expect prices to hold in that area. And that range is 6,050 to 6,080, plus or minus a couple of points. So to summarize, yearly 5-9 down, quarterly 5-2 down, monthly 5-1 down, weekly 5-9 down, and tomorrow's area is a 5-1, 5-2 combination on the daily chart. And all this is taking place within about 100 points on the S&P 500. So we're in that area right now. We'll see what happens. To really get serious about this being a big top, we would see, first of all, the daily chart do what? It needs to move down back inside the envelope, close inside the daily envelope, close down below the daily PL dot into congestion, and then see what happens with the weekly, and so on. If price keeps continuing up tomorrow and blows through that weekly 5-9, all bets aren't off yet. There's a pretty good sized range of price here, but for the near term, probably indicates that we're going to keep marching higher. So that's it. Again, I'll post a comment, or I'm sorry, I'll post a link in the comment section for the Inner Circle video. And if you have any questions, place them in the comments section below. Please like, please subscribe, and please share, and we'll see you again next time.